Good morning, Durham Public Schools staff members. Hopefully there's some family members that are with you today that are taking part in this 5-week series that we're going to do regarding a financial fitness boot camp. I'm Paul Lejeure, the Chief Financial Officer with Durham Public Schools. We're working with Verity Asset Management Group to bring you these presentations. We have this week's strategies to maximize your cash flow is the week 1. Week 2 will be debt management and student loan forgiveness programs. Week 3, measuring your risk score and how to invest accordingly. Week 4 will be expand your planning possibilities using what-if scenarios. And week 5, understanding your Social Security and retirement income planning. These are developed in coordination with My Financial Answers. And I'm going to now turn it over to Ben Pitts to bring you along with the introductions of his staff and a little bit about their company before we start this week's boot camp. Ben?
Thank you very much, Paul. I appreciate that. Hello, everyone. My name is Ben Pitts. I am the CEO of My Financial Answers. I founded the company. We have been working along with Verity Asset Management and Paul and the team at Durham Public Schools to help be a part of Durham Public Schools Take 10 financial wellness program. So we have really enjoyed being a part of that. I've always enjoyed working with Durham Public Schools over the last couple of years here. Our deep desire at My Financial Answers is to really offer the tools and the coaching that can help you all ensure you're prepared for your retirement and financially well day to day. We invite you to sign up for My Financial Answers. We would love for you to use the tools, sign up to speak with Becky and our team of financial planners. Becky here on the phone is going to present to you today. Again, we really appreciate you for joining us. I would like to introduce Becky Iacopelli here. She is our lead financial planner. She's going to go through this presentation and the next 4 presentations that follow. So thank you for joining. I'll be back to go through some Q&A at the end and hope you all stick around for that as well. So with that, Becky, thank you. You can take it away.
Thank you so much for the introduction. My name is Rebecca Iacopelli. I'm a certified financial planner here at My Financial Answers. I've been working in the industry for about 7 years, working with investment management, financial planning, and tax strategies as well. So we're really excited to get started with this boot camp to help you work through your financial goals. And with that being said, I'll just get started with the webinar.
One last thing, I would encourage everyone to ask questions throughout the presentation. We will address those questions at the end. So there is a question bank. Just go ahead and put your questions in there. So thank you.
All right, so welcome to week 1 of the Financial Fitness Summer Boot Camp that's provided to you by Durham Public Schools. To get us started, I wanted to start off with an example related to our discussion today. And so I wanted to get started with an example related to our discussion today. So with My Financial Answers, it's a tool available to you through your benefits program to build your financial plan. And with that, I had a client who signed up for My Financial Answers, put in all their information for me to review, and we were able to find $1,000 a month after diving into their budgets to save for their retirement. With that $1,000 a month over 20 years, if it's invested in the stock market, it can save up to $583,000 for your retirement. So these are really the success stories that make my job satisfying and encouraging, knowing that we are building financial futures and happy, stress-free retirements. So to further assist you in doing the same, this boot camp was designed to bring clarification and understanding to specific areas of your finances. With a deeper understanding of areas of your finances that greatly impact your life, you can really make smart and sound decisions that will better your financial future. So through this boot camp, we're going to break things down and talk you through steps you can take to conquer problem areas of your finance. So week 1, we will discuss maximizing your cash flow. That's what we're going to do today. What are the best ways to go about saving for your future and manage your budget? For the second week, we will dive deep into debt management and student loan forgiveness, and what programs are available to you to help you reduce your debt over time. Then the third week, we'll go into understanding your risk score. And that week, we'll learn how to identify what level of risk you should be taking in your retirement, and also your investment portfolio based on your specific situation, and really how important it is to be properly invested to achieve your goals. In the fourth week, we will learn how to expand your plan using alternate scenarios. Here we will go over how to make adjustments based on your scenario and what impact that will have on your overall plan. Lastly, in our fifth week, we will review understanding your Social Security and other elements of retirement income planning. So we hope you join us to get more detail on how to approach retirement and how to satisfy your income needs throughout retirement. We hope you'll find this series of webinars to be insightful and helpful to you as you navigate through your finances and ultimately strive to meet your goals. Don't forget to work with the My Financial Answers tool, specifically tailored for the bootcamp and full of additional resources to help build your financial plan during this 5-week journey to a solid financial foundation, and coordinate with your advisor that's provided through My Financial Answers as well to assist you through your planning and help answer any questions that you may have. So first, let's dive into 10 tips for maximizing cash flow. The first step in a successful financial plan is identifying your expenses. The reason this is of utmost importance is because the only way to build wealth is by spending less than you make. If you're spending more, there's no way to build up your assets over time. Instead, you will be incurring debt and deepening a hole that is very difficult to get out of. However, in terms of identifying your expenses, you want to first take a look at a month that you would consider to be a typical month of spending. For an example, you may want to start the process by looking at your January statements. This is because the coronavirus lockdown has really reduced the expenses for most of us, as many are not eating out or incurring traveling expenses as they would under normal circumstances. So let's say that you start with January. First, you would need to take a look at your checking accounts and add up all of your withdrawals that were made during that month, including expenses from a debit card, as well as cash withdrawals. Transfers to other accounts should be excluded, as that is not an expense. If you took anything out of your savings to pay bills, this should be included in your spending for that month. Additionally, take a look at your credit card statements. Any charges made to your credit card during that month, they would qualify for expenses for the month, even if you did not pay them off. Next, we wanted to categorize those expenses. This is the first step in creating a budget, which we'll get to in a minute. Categorizing the expenses, that gives you a clear picture as to where your money is going and on what. In order to troubleshoot your spending, it needs to be given a category, such as utilities, groceries, entertainment, and so on. Now we want to determine if you've ended up with a surplus or a deficit. In order to do so, we want to add up your total take-home pay. So that would be any source of income you have. Add up what hits your checking account, not your gross income. What matters in this case is what hits the bank. If you have a spouse that is self-employed, make sure to factor in any taxes that are owed and subtract that from the income received. This will give you the after-tax amount for the self-employment income. Next, we want to subtract our expenses that we calculated in our first step from our total income. This will give us either a negative or a positive number. If we have a positive number, then we have a surplus, which that's a wonderful thing. That means you are spending less than you make, and that is really the key to building wealth. So you're off to a great start if that's the case for you. But with that surplus, you want to put it to good use. So be sure to save this extra cash. We want to identify our goals through building a financial plan, and then utilize those funds to go towards one of your goals. This is where My Financial Answers comes in handy in building your plan, and a discussion with your advisor can help you determine how much you need to put towards your goals in order to meet them. If, on the other hand, you have a negative number, so a deficit, this is where we will need to get into the troubleshooting process. We need to drill down on expenses to find ways to cut. This is why categorizing, as mentioned before, is so important. In order to know what to cut, you need to know what areas you are spending the most and most likely too much. Then we would proceed in drilling down to the individual transactions to see what exactly we are spending those dollars on. Do we go out to eat every night? Should we cook more to reduce our costs? Perhaps you are signed up for a ton of subscription, which is really common. be it entertainment or others. Can we perhaps get rid of some of these to reduce our expenses? For example, my husband was eating out to lunch every day, so I started making his lunch, and we saved over $250 per month. That may not seem like a great deal, but it certainly adds up over time. I had clients that had to cut out country club memberships, saving thousands of dollars. And even now in the world of the pandemic, many are spending more on groceries because they are cooking more often, but their eating out expenses have taken a nosedive. So perhaps we can take this routine and extend it even past the lockdown, reducing our eating out expenses, which are much greater proportionally than an uptick in our groceries. These are hard decisions to make and of course require some sacrifice. But if we want to make it anywhere in terms of retirement or other goals, this is really something that's non-negotiable. Number 3, let's create our budget. We always want to save first, then spend next. If we don't save first, we're likely to skip this altogether. If we do save first, we will only see what's remaining as money to be spent, which can help us determine what our budget should be. In the coming slides, I will show you a way to determine how much savings is recommended. After we've determined our savings, we want to subtract that from our take-home pay that we calculated previously to come up with how much we have left to spend. From here, we want to break it down into the categories we identified before. Some adjustments may need to be made in order to fit these categories into our overall budget number. Some difficult adjustments may need to be made, but we really need to build this out in order to be successful. So there are some helpful apps that allow us to follow a budget and track our expenses. Some of these include Mint.com and Every Dollar. You might have heard of those. These are free and allow you to build a budget quickly. They allow you to connect your accounts and monitor your spending over time. Personally, I use Mint.com for my budgeting app, and it is a great deal to help to me. I look at it every day to see if there are any charges on my accounts, create goals for savings, and check back on how much I spent on certain areas to see if I can improve in any way. Having an app with a live budget allows you to take a look at your budget before making a questionable purchase. Instead of impulsively buying something you may not need, you can take a look at your app before doing so. This will help you gain perspective and determine whether or not it fits in your budget for that month. If you can cut it, go ahead and make the purchase. But if not, you should skip it. Maybe you will have room next month, or maybe you need to save up instead of buying right away. One important tip is to make grocery store purchase a separate budget from eating out in restaurants. This is often one of the largest expenses of your budget outside of housing costs. Buying lunch every day, going out to eat, ordering takeout, that can really add up quickly. So some of this may need to be cut back. Cooking meals, although sometimes time-consuming, are significantly cheaper than eating out, as I've mentioned before. Specifically, drinking alcohol, that comes at a really high premium. Adjusting these expenses may be critical to coming up with a reasonable budget. Here's an example of 2 ways we can make a budget. On our left, we see the spreadsheet method, where we manually enter all of our income and expenses into a template. Then we can go back each month and enter what we actually spent to see the difference, whether or not we're on track or over budget. This can be a good baseline to get our ducks in a row before making our online version, if that's the route you want to take. On the right, we have a snapshot from a Mint.com example that shows each of your budget categories and a bar that lights up green, red, or yellow, depending if we were over, under, or right on par. These automatically adjust as you continue to spend since your accounts are connected. Due to it being live and rather effortless, this is an extremely helpful tool that I really recommend you take advantage of. And even better, it's free. So how do we build our budget? What is the baseline for how much we should be spending and saving? To best determine this, we want to start with the 50-30-20 rule. This states that 50% of your after-tax income should be going towards your basic needs. So this includes housing costs, transportation, insurance, groceries, healthcare, utilities, and really the other essentials to living. The next 30%, that can be used for our wants or our fun money. These include things such as ordering takeout, entertainment, cocktails with friends, new decorations for a home, or even new gadgets. Lastly, and most importantly, 20% of our income should be going towards saving for our financial future. This includes paying down debt, saving for retirement, and saving for other endeavors such as a down payment on the house. Identifying how much we need for retirement, that's where my financial answers and your advisor's assistance can come into play. Taking a look at your overall situation and coming up with a number for what to save is something we can do together. All in all, building a budget takes a bit of thought at first, but take the time over the summer to come up with a solid budget, and you can use the apps to see how well you stick with it over time. The changes you can make as a result will be extremely helpful for you in the long run. Now we move on to addressing a deficit which can quickly build up our outstanding debt. Some ways we can change some of our behaviors is by breaking things down on a weekly basis. For example, if our grocery budget per month is $400, we know we have $100 to spend every week when we go to the grocery store. Making a list in advance can be very helpful to keep things on track. Many grocery stores have apps that let you put your list in an online cart. Even if you don't use it, this will add up your total bill so that you can see how much everything will cost before even entering the store. Of course, you can also have your order delivered or for pickup, which allows you to add and remove easily to fit within your budget. This way, you won't also be tempted by the special treats. They're always on the end of the aisle that you don't need, but of course you can't resist after seeing it. Personally, if I see the Keebler M&M Rainbow cookies on the end of the aisle, I may want to buy 4 boxes, but this is certainly something I do not need, nor is it great for my diet, of course. So this is one step in recognizing the difference between wants and needs. Distinguishing between wants and needs, that's extremely important, and it's also a hard reality to face. I had clients who wanted to take their kids to Disney World, but they had 3 kids, and everyone knows that that's certainly a very costly trip going to Disney with 5 people. So we added up the cost, and it was far above what they could afford without taking on credit card debt to do so. They had to make a tough choice in where they wanted to go, but instead they went to the Outer Banks, which was much more affordable and actually less than their budgeted costs. And afterwards, they said how much of a relief it was to not have to go into debt, especially since the kids, they really had a blast anyway. So those luxuries over and above what we need, they qualify as wants. Buying that luxury car instead of the economy car, that's a want. Do we actually need the fancy designer name pair of shoes, or can we buy an off-brand to save significant dollars and cents? This is a learned behavior that is tough to face if we are used to making impulsive decisions. We need to take a moment to think before we buy to ensure we are making the wise decision. We can think about what we used to get by with before we had to have this new thing. Somehow we were getting by. And maybe that is good enough if it doesn't fit in our budget. That's not very fun, but having no money for retirement, well, let me tell you, that will not be very fun either. Something we can also do is simplifying our accounts as well as nicknaming them. It's easier to track money coming in and out of one main checking account instead of having a few. We may not see the complete picture if we have our money spread out in too many places. This can distract us from what we actually have to spend and save. But when it comes to saving accounts, different accounts with identifying names, that can be helpful. First and foremost, we want to make a separate emergency fund account for rainy days. 3 to 6 month expenses is recommended for this account. Once we have it in there, the goal is to not touch it unless necessary. Perhaps our dishwasher needs repair or a car is in the shop. These would be examples of a rainy day expense. But it is most important for if there's a job loss in the family. Since COVID, over 21 million people are out of a job. That gives the nation a 13% unemployment rate, a number that has not been seen since the Great Depression. So there is likely someone you know, if not someone in your own family, who has suffered job loss during these hard times. Having enough to get by during these difficult times without going into debt, that's, well, extremely significant. You can often nickname accounts on your bank's website. So naming the account emergency fund, and then the other savings account after what they are intended for, such as Disney World 2022 or home down payment. We can track our progress for savings through the apps mentioned before as well. This can really help motivate us to continue and ensure that we do not go into debt when these events arise. Next, let's get into credit card versus a debit card and who should use which. The question really lies in what kind of spender you are and your habits. Are you self-disciplined with spending? If you are not, a debit card would be for you. This means you can only spend what you make. The money comes out of your checking account immediately, and there's no way for you to spend more than you have in the account. This can be very beneficial for someone who likes to spend $200 on those pair of shoes, but they really can't afford it. Personally, when I was 22, I bought myself a Louis Vuitton purse as a graduation present to myself, which I, of course, had to take out of my savings for. If you tend to go over on your expenses and go into debt, or take out of your savings account to cover your expenses on a monthly basis, a debit card, that's for you. Two downsides, though, to a debit card is the lack of rewards often offered with credit cards, as well as the lack of protection from fraud. You may be liable if someone steals your debit card and it is not caught right away. On the contrary, if you are self-disciplined with your spending and find yourself sticking to your budget on a regular basis, a credit card is for you. Credit cards often have rewards such as cash back or travel points that allow you some extra funds towards your next trip or pay your bills in general. Personally, I use my credit cards for all my expenses, but I pay it off in full every month. That's the key. The benefits are great and the cash back really adds up over time, helping pay for some extra fun activities on vacation. They also offer liability protection for fraudulent purchases, which can prove very handy in a bad situation. One time, I had someone purchase over $2,000 of something at Home Depot, which was certainly not me, as I didn't own a home at that point, and it was covered right away by the credit card company. You are only offered limited protection on a debit card, and it depends on how soon you report. If you don't report soon enough, you may be liable for the entire amount. What's important when using credit cards, however, is that these should be paid off in full every month. In that way, it acts similar to a debit card, but you are paying it all at the same time as opposed to transaction by transaction. You can choose the payment date on your card to be made after you get paid so that the entire balance can be paid using your income. This means you pay zero interest, and this is why being self-disciplined is of utmost importance. If you're not self-disciplined, you will spend over that amount that you make, and you will have a balance that you can't pay, which will incur interest, and a high rate of interest at that. For example, if you had a balance of $1,000 on your credit card with an interest rate of 24%, say your minimum payment is $21 and that's all you pay, you will have paid over $3,200 in total payments, and it would take you nearly 13 years to pay that off. And that's only $1,000 of debt, which is lower than normal. We want to avoid this as much as possible, of course. So have some honest self-reflection and determine which kind of person you are, and then choose the best method based on your behaviors. In this image here, we can see the yellow in our new balance, which is the balance we pay if we are going to pay in full and have zero interest incurred. The orange is our minimum balance, in which case we would incur the 19% interest that is seen in blue. Let's be sure to pay the yellow, which is the full balance, each month to stay out of debt while also reaping the rewards of the benefits of credit cards and their perks. Now, what do we do about large purchases? There's always going to be something that comes up that we need that knocks our budget out of the water. If it's a want and not a need, or a need that is not sudden, the best course of action is to plan in advance. When we plan in advance, we can think more carefully about what we should purchase, how much we should spend, and if we really need it. We can also start saving up for the purchase. In order to save up, we can break it down into mini goals, as we mentioned before. If we want a certain amount for Christmas to avoid going into debt, divide that amount by the number of weeks, and it will be a much more manageable goal. For example, if you want $1,300 by the end of the year, all you need is $25 per week. All you got to do is pack your lunch for 2 days during the week instead of eating out, and there you've got your $25. Immediately take that $25 during the week and transfer it into your savings. Also, you can buy your items on big sales days. Holidays are great for this, as well as, most significantly, Black Friday and Cyber Monday. Even Memorial, Labor Day, and July 4th have great sales. You can find great deals on these days and save tons of money. If you think far enough in advance, you can even buy birthday and holiday gifts during these times instead of last minute to save hundreds of dollars. If it is an emergency though, like an extensive home repair or a car accident, you need to take it out of your emergency fund. There's really no shame in doing so. That's what the emergency fund is for. Things break down and medical emergencies may occur, requiring us to take out of our emergency fund. So be sure to replenish it over time, and then we'll back to where you were in no time. As I mentioned before, we want to pay ourselves first and then spend the leftovers. This is sometimes the only way that we can remain disciplined with savings. One way to ensure this happens is by splitting your direct deposit. Oftentimes through online payroll services or through your HR, you can split your deposit to go into different accounts automatically. Doing so will immediately put the money into a savings account and the remaining balance into your checking account. You will never even see the money that you might otherwise be tempted to spend. After you've gone through the process of creating your budget, based on the 50-30-20 rules discussed, you can use these numbers to make changes on your payroll. Another change to make through your payroll is contributions to your retirement accounts. Through your employer, you can make contributions to your 403B to automatically take out of your paycheck. This is another way to have automatic savings and not be tempted to spend what you intend to save by having it come out of your checking account first. So we strongly encourage you to prepare the discussed points in order to take a step forward in building your financial plan. After this webinar, we will send you worksheets to kickstart your budgeting process and help you along the way. In order to determine how much you need saved for certain goals, and particularly retirement, please sign up to build your financial plan through My Financial Answers, which is free, using the coupon code provided by DPS. And that coupon code, as you can see on the screen, is DPS Take 10. So after filling out the information requested, you can get in contact with an advisor like myself through schedule an appointment to have even further guidance on how much to contribute to your retirement accounts and to what accounts to maximize your tax benefit. Our mission, of course, is to see you achieve your goals through financial fitness, and the first step to doing so is getting a handle on maximizing your cash flow. So utilize these 10 steps to get you there, and you'll be well on your way to meeting your goals. So we thank you for tuning in. We look forward to seeing you next week for debt management and student loan forgiveness, and now we'll pass it over for questions.
All right. Becky, thank you very much for that helpful content. We actually did get a question in. It was more of a comment. So this is excellent information. Thank you. Honest feedback from an honest listener. Thank you very much. So we're going to ask a couple of poll questions. We'd like you to stick around. We hope you can. We're going to ask a couple of poll questions just so we can gather some data and share some information. It's all private, so just want to get a sense of how people do manage their cash flow today. So I'll go ahead and launch those poll questions right now, and then we're going to go into some questions and answers. And we already have a few questions teed up, but for those of you that have questions that are on your mind, please do not hesitate to ask. So I'm going to launch question number one is, how often do you review your spending? So we'd love for you to go ahead and answer that question for us. The poll is in progress. We'll give you a couple of seconds here. While people are answering that question, I'm just going to provide a couple answers to questions that came in. Someone asked, will we receive a copy of this presentation? The answer is yes. We'll make sure you have this material as part of follow-up for this webinar. Someone else asked, where do we sign up for My Financial Answers? We will make sure that we share that link in follow-up as well. It is, for anyone that is a note taker, if you want to write it down right now, it is https://dps.myfinancialanswers.com/register. I'll also send that out through the Q&A to everyone, so you have that as well. And then someone else asked, is this being recorded? So you can do it later. And yes, we are recording this presentation, so you'll see those answers as well. So we have the poll questions coming in right now. How often do you review your spending? 21% of people said daily, 19% weekly, 12% bi-weekly, 41% monthly. So most people say monthly, and then 5 people say as little as possible. I can understand that. So we do have a very diverse set of people, and this is the reality with personal finances and cash flow. Some people have an interest in it and like to do it, but it's just all over the place. And by the way, you all, if you're in the camp of as little as possible, or you need some help, you don't have to do this stuff alone. Part of My Financial Answers and what we do is you can set up some time with our team and Becky to go over which path might be best for you. Is it tracking using a spreadsheet? Is it using a mint.com? And we're here to help you with that. So diverse answers there. I'm going to launch another question here. Poll question number 2. I'm going to close this poll out. Poll question number 2, what types of tools do you use to track your spending? So we'll go ahead and wait to see what answers we get there. Please submit any other questions you have after you answer that question. And then we'll have some more Q&A that we're building up here, so we'll answer those questions and answers later. So we see some answers coming in. We'll give you another 20 seconds here. Yeah, I'm going to hold off on all the other questions until we finish these poll questions. So answers coming in here, we've got Excel spreadsheets are pretty common. This is pretty interesting across the board. Pretty evenly split across different approaches. Excel spreadsheets, about 12% of people. Online tools, about 12%, 13%. Pen and paper, still 30% of people use pen and paper. 25% use their online banking tools that are available to them, which are good resources. And then 24%, a quarter of people do not use any tools. So again, diverse answers, personal finance is one of those things that's absolutely personal. But again, we encourage everyone that needs some help, maybe some tips, to set up an appointment with our team and Becky to figure out which one might work for you if you're looking for a new solution. So go ahead and close out that poll. We have one last question for you. How would you characterize your approach to managing your cash flow? I'm on top of it, could do better, however, pretty organized. I'm getting by, or I need help. We'd love to see your answers there. And once we're done with this question, we're going to just go into some more in-depth questions and answers here. So just give it about another 20 seconds or so here. So some questions coming in. We encourage you to please keep sending those questions. We have a bunch to get through. So it looks like in our poll answers, no one says they're on top of it yet, and I think that's probably a common feeling. Everyone feels like they struggle a little bit with managing their personal finances. Looks like we're getting a couple people to saying yes. 4% say they're on top of it. Half of people say could do better, however, I'm pretty organized. 31% say I'm getting by, and 14% say needing help. So those answers are shifting around. Well, looks like we're done there. I'll close out that poll. So, I think the takeaway, Becky, is that, it's just, as people think about managing personal finances, we all come from different backgrounds. We had family members that taught us, and not many of us had teachers that taught us how to manage our personal finances. Some of us had to figure it out on our own. So we see lots of different approaches that people take. And again, I would just encourage everyone, if you're looking for a better approach, and also if you're looking for some level of accountability, getting some financial coaching and speaking with a financial planner is one way to do that. So with that, I'm going to go into some more just general question Q&A that came up both before this poll and then during the poll. Becky, you had mentioned credit cards. I think it was in section 5 you were talking about credit cards, and someone had asked the question, how do you think about credit cards? Are you classifying credit card payments as going toward payments that are going toward your future? Sort of how do you think about credit cards in terms of your budget? I think it was some content that you covered there, but maybe some clarification as to how that gets classified it may have been the wants versus needs section.
Yeah, so there's two different ways to think about credit cards. One, if you're using it to pay for your monthly expenses and you're paying the full balance every month, then you would categorize those expenses as part of your budget. So that would be part of your monthly categories, such as groceries, healthcare, things like that. When it comes to the 50-30-20 rule that I was talking about, if you have a balance due on your credit card that's over and above what your monthly spending is, then you have a balance on your credit card, then you would want to incorporate that into the 20%, which would be saving for your future, because that's part of paying down debt. And paying down debt is a part of saving for your future.
Awesome. Thank you, Becky. That's fantastic. So we have a question here. Is it better to have a savings account with an online bank or a big bank, Wells Fargo, Bank of America, etc.?
Yeah, well, it really depends. Right now, interest rates are extremely low, so it's really hard to find a savings account with an interest rate that's pretty high. A lot of times, actually, credit unions are really beneficial because they offer a little bit higher of interest rates, and they actually have a lot of free services that are not available with the big banks. Then there's also online banking accounts like Ally Bank. They offer pretty high interest rates as well for savings accounts. And even having your savings account at a different bank, that can also be helpful because then it's not as easily accessible. And you make sure that you're not spending that money that you saved for the Disney vacation because it's in your regular bank account. So there are a few ways to do it, but really I would look for a good interest rate on the savings account.
Awesome. Thank you, Becky. We have another question. I think this is the reality for lots of folks today. We have someone asked the question, I'm a single mother with one income. It's hard to save because it seems like something is always happening. Should I still sign up for a 401k for future savings? So that's a question about prioritization.
Yeah, so in terms of priorities, I would say saving up an emergency fund is really going to be your first priority if you're on a tight budget. And the reason for that is because if you don't have an emergency fund, if you're not saving for that, then you're likely to go into debt because when something comes up, you don't have the money to pay for it. The car breaks down and you're going to have to put it on a credit card and you'll have a balance due. And the point of having the emergency fund to avoid that debt is because credit card interest rates, they're often north of 20%, which is sometimes more than you will make in the market. So in terms of making sure that you don't have that debt, that's really important. So if you're on a tight budget, I would start off with saving for an emergency fund.
Yeah, and I would add to that, Becky, the challenge of putting money into a 401k, of course, we always encourage saving for retirement long term and investing in your future. But if you end up needing that money and having to take money out of your 401k, that can be a bit of a challenge in normal times. I know we had reviewed on previous calls, Becky, some due to COVID-19, there's been some relief with certain provisions for a 401k, but we certainly want to be careful with putting money into retirement accounts because it's you can end up with penalties if you do in fact need that money. I don't know if you want to cover that specific provision, but I think that's just a general comment for longer term.
Yeah, so right now, because of COVID, you can take out around $100,000 of money from your retirement accounts penalty free. And you can also pay back that tax that's due on that over the next 3 years. So there's certainly more flexibility than there is if it wasn't COVID because there would be a 10% penalty for taking that money out earlier than 59.5.
Yeah, that's just that there's a lot of administrative work to do that as well. So it's always better if you're going to need that money, make sure you have that emergency fund available in case you need it. Okay, we'll move on. Another question. Serious uptick in grocery bills is hurting our ability to save more money during the pandemic. Any tips?
Yeah, so I really like looking on the apps that are available. Sometimes, I don't know which grocery stores you have in town, but for example, like ShopRite near me, they have an online app where you can put things in the grocery cart so that you can really see how much you're going to be spending. That's really important because you can add or subtract because oftentimes there's things you buy when you go to the grocery store that you really don't need. You don't need 3 bags of chips, maybe just 1 bag of chips or something like that, or maybe buying the generic brand instead of the brand names. Oftentimes they're just as good. So really making sure you're tracking that spending before you go into the grocery store because oftentimes you'll be tempted with things that you don't need. So making an advanced step will really help you in reducing your costs.
Awesome. Thank you, Becky. Those are great tips. I'm intrigued and curious about using my credit card for all of my purchases. I usually put cash aside for my weekly expenses after I pay myself and my bills. Just wondering if it is right for me, I guess, to use a credit card for all purchases. And I think, Becky, that goes back to what you were talking about, which is if someone is very diligent and organized, there are benefits to using credit cards to get points and avoid the issues with potential fraud. But any other tips for someone figuring out if it is the right path for them to use their credit card for that?
Yeah, and sometimes it comes down to timing as well, in terms of the due date of the credit card versus when you're going to get paid, and making sure that you don't spend that money from your checking account before that credit card payment is due. So you want to make sure you're not you're not taking out too much cash from the ATM machine. That's reducing the amount of income that's in your bank account, so that when your credit card is due, you can pay it in full. I think there are a lot of benefits to it, but of course it requires you to be very self-disciplined, and a lot of people do struggle with that. So you really need to have some good self-reflection, determine if you can time things correctly to make sure you make the payment. But if so, there are benefits to doing so.
Fantastic. Thank you, Becky. Here's a good question. How do we make an appointment with My Financial Answers?
Yeah, great question. So on the My Financial Answers website, when you do log into the dashboard, on the right-hand side is an area where you can schedule an appointment. And that will bring you to a Calendly link. And right now that's connected to me. So you'll set up a meeting that's in a convenient time for you, and then we'll get together over Zoom.
All right. We can also make sure we share your Calendly link outside of My Financial Answers if someone wants to set up an appointment and they have some questions before they sign up for My Financial Answers. We'll make sure that that's in the follow-up. Great question. Thank you for asking. Do you recommend creating a separate account for short-term savings, vacation, home improvement, etc., or will Mint or other budgeting apps help with that?
Yeah, so I definitely would recommend putting in a short-term savings account as a separate account, and also naming that account for what it's for. And how Mint.com works with that is when you set up a goal in Mint, what you do is you click on the account that it's linked to. So if you are saving, $500 a month towards your home improvement, Mint will know when you make that transfer to that account that you've saved that amount, and it'll project it forward for the future to see when you're going to accomplish that goal. So definitely putting in a separate account will help you in tracking those goals.
Awesome. Thank you, Becky. All right, another good question. We've got a bunch of questions. We encourage you to keep coming. We'll stick around until 12:30 to answer any that exist or that come in. My goal is to buy a house in the next 18 months, and I've got semi-bad credit. Can you help me figure all of that out? I'm assuming this is a question for My Financial Answers. Is this something we can help this individual determine? How do they improve their credit? How do they get on track to buy a house in 18 months?
Yeah, absolutely. So if you sign up for My Financial Answers and we work together, you can put in all your information. I can take a look at your overall situation. I can take a look at what kind of house you're looking to purchase, how much we need to save, the interest rate that's going to likely be at given your credit score, and we can come up with a plan of action so that you can accomplish that goal. So certainly sign up, schedule an appointment with me, and we can address that.
Yeah, awesome. All right, great question here. Are there programs to help develop a plan to pay down multiple credit card balances? So if any of us have 3, 4 credit cards, any technology, any websites that we can use to get control of that you're aware of, Becky?
Yeah, actually, if you tune in next week, we're going to be covering debt management, and 2 strategies that are available for paying down debt is called the debt avalanche or the debt snowball. And we'll go into how you can go about paying down that debt. And also there's a lot of companies that consolidate debt as well so that you can pay it all in one account as opposed to having 4 different accounts open. And there are various different companies. You can Google search that, and there's various organizations that will do that for you and help you with your debt relief. But certainly tune in next week and we'll go into deeper information about that.
All right, great, Becky. This is, I'll ask this question. So what if I have more in debt, minimum debt payments, more than 20% of my income goes to minimum debt payments? Any thoughts on how someone can manage that, whether it be on the expense side or potentially the income side as well? I guess that'd be a good way to think about it.
Yeah, in that case, there's going to be some difficult decisions you're going to have to make because most likely you're going to have to cut back a little bit on your expenses. So unless you have a means of finding other sorts of income that you can have come in, cutting back on your expenses in certain ways, that can help you be able to make those minimum payments. And if they're more than the 20%, that's okay for now. But what you're going to ultimately do is have to stop the bleeding when it comes to adding more debt, and cutting down your expenses is going to be the way to do that.
Will there be any more information on how to build your credit? Is that something that we cover in the next session, Becky, or is that not something we'll cover?
That is not something we cover. I can certainly add in some as I'm building the presentation. But credit does take a long time to build up. So it's really important to make your payments on time, even if they're your minimum payments, not missing them, not passing the deadline. Those are certain ways that we can build up our credit over time. Oftentimes also having different lines of credit open, such as having a mortgage, an auto loan, a credit card, all of those different types, the variety, that also builds up your credit score. So there are different various ways, but we can go over them in our next webinar as well.
Yeah, I'd also suggest an app that I personally use called Credit Karma. That's credit, K-A-R-M-A, creditkarma.com. And that app, you can monitor your credit score. You can see different transactions that are happening against your credit score, and you'll actually see your credit change over time. And it will give you tips on how you can actually improve your credit. So it's a really easy app right on my iPhone. I'm assuming they also have an app for an Android user as well. So I recommend that. Another good question: should I use a loan against my retirement plan to pay off credit card debt? How do you think about that, Becky?
Yeah, so there are certain ways that we would have to address those together in terms of looking at your overall financial plan. It depends on how much your interest rate is on your credit card, but I would first like to see consolidating that debt into a lower interest rate. There's ways to find lower interest rates available in the market, even through a balance transfer to a 0% credit card, helping you to pay that over time. I would want to look to other ways to lower your interest rate before taking out a 401k loan. But of course, to have further detail on that, I would like to address your entire financial plan together.
Yeah, these are all very personal decisions. All right, I've got 4 more questions. We do have some time left, and we have a lot of people still on the call. If you have other questions, just go ahead and shoot those in. In regards to the 50-30-20 rule, to what category does building your emergency savings apply?
So that would apply to the 20%. So that would be saving for your future. So we want to make part of that as the emergency savings. Part of that is paying down your debt if you have any, and also saving for retirement would all be under the 20%.
Awesome. Thank you, Becky. Another quick question. Is it better to rent and save money for a down payment to buy a house, or is it better to go ahead and purchase a house?
Yeah, so there's one thing to consider when it comes to purchasing your house is oftentimes there's private mortgage insurance if you don't have a 20% down payment. So working your way up to a 20% down payment so that you're not paying extra costs in private mortgage insurance can be beneficial. So certainly saving up over time would be better than not doing so.
Yeah, great question and a great answer. Okay, a few more questions here. Is it best to have a financial advisor, or can you go to, for example, a credit union or a bank to talk to the people in the bank? What is the difference?
Well, they offer a variety of services. Sometimes banks do offer financial planners, but like I said, they're often biased towards their own products and services. So I'd recommend having an unbiased financial planner, one that's fee-based, like a certain fixed cost for your services, or coming to me. I can also help you with your financial plan before going to the banks, because they might not offer as much of an expansive and comprehensive plan as a financial planner would.
Yeah, financial plan, just so everyone knows, the financial plan through My Financial Answers is very comprehensive. So whether you're 30 years old and just getting married and having a baby for the first time, or 50 or 60 years old and thinking about finally retiring, or anywhere in between, or even before that or after that, My Financial Answers takes a very comprehensive view of your finances. So it helps you think about retirement. It helps you think about, do I have enough life insurance? Do I if something were to happen to me or my spouse, help you think about how much should I save to send my kids to college, and along with Becky and a financial planner on our team, we can really help put all that into context and help you think about your goals. You may not have thought about your goals much, especially if you're a little bit early in your career. So it's very comprehensive, the service that My Financial Answers provides. There certainly are banks out there, as Becky alluded to, that have planners that go into a similar depth, but ultimately through Durham Public Schools and Take 10, you all have access to this for free. So we'd encourage you to take advantage of it. So I have one last question. If there are any more, please shoot them in, and we'll conclude after this if there are no additional questions. I have little savings, lots of credit card debt, but I do have some equity in my home. Do you think I should use this equity to pay off the balances of my credit cards?
Yeah, so sometimes that can actually be beneficial depending on the interest rates that are available to you. So like I said, I would first look into other sources of managing that credit card debt, such as debt consolidation and balance transfers that offer 0% interest rates. So there's a few ways to look at that in advance of going through your home. But if the home interest rate for a HELOC, home equity line of credit, or something of that nature offers a lower interest rate, then certainly using that to pay off your credit card debt would be beneficial to you.
All right. Oh, someone's asking us to write in the website where they can access My Financial Answers and set up an appointment. Becky, I'm going to go ahead and put the My Financial Answers here link, and if you could type into the question poll your Calendly link, I think that would be fantastic as well. So here is the link to register for My Financial Answers. I'll send it to everyone, and we'll follow up in case you don't get this this chat. So I'm going to go ahead and send this DPS. Make sure I typed it in correctly. Hopefully I did. So y'all should see the register link there. And Becky, you can take your time with the calendar.
I just sent it in. So I just sent in my Calendly link into the chat, so you can click on that.
In the chat or the question?
In the chat. It should have gone to everyone.
Okay, got it. Awesome. Good deal. Good deal. Well, I think that concludes all the questions we have. Okay, one last question. I don't remember if it is through DPS and no fee, or do I pay a separate fee? There is no additional fee for you all to pay for My Financial Answers. It is 100% free for you to sign up, use My Financial Answers to build a comprehensive financial plan and work with Becky on that financial plan. So no additional fees whatsoever. You will see when you sign up, there will be a page that looks like there is a fee, but there is, when you log into My Financial Answers, you will see a coupon code that you can use that will allow you to do it 100% for free. Also, the links are referenced in the webinar. Amy from Verity Asset Management has shared with us. So you should see that in the webinar links. It will be in the follow-up email, I'm sorry. The links will be there as well. And there is no separate fee. So with that, we really thank you all. I mean, really well attended. Everyone stuck around. I think personal cash flow management is something that all of us have to think about. But we thank you all for joining. Again, we encourage you to sign up for My Financial Answers and take advantage of the benefit that you have through Durham Public Schools. Take advantage of the ability to speak with Becky and our team. And we wish you a wonderful summer, a happy, healthy, and prosperous summer to all of you. So, Becky, thank you very much for your time. Paul, we appreciate you all allowing us to present to Durham Public Schools, and we look forward to it again next week. We remind you all to please attend next week's session as well. Becky, remind us what the topic of that next week's session is again?
Yeah, that's debt management and student loan forgiveness.
Awesome. Well, thank you again, Becky. Thank you, everyone, for joining, and have a great week. Take care.